Good day, investors. Welcome back to Muffett Investment Views. We hope you are all having a nice weekend. It was an excellent week at Muffett Investments. We are on LinkedIn and Instagram where we share some of our ideas. So please do follow us on these platforms to have real-time market analysis. For example, we called out on Thursday before the market opened on a setup for Nasdaq, which we shared on LinkedIn, and then entered, resulting in a 270-point gain. Okay, let's start with the indices. We start with the Nasdaq daily chart. The price has shown strong upside momentum, and the price has closed above both the daily FVG gaps that we outlined in the last analysis. So the bearish bias has been invalidated. So price is likely headed to the daily/weekly FVG above. If we have a closer look at the daily chart, if the price retraces to the shaded area below, that would be a good place to take long positions with defined stops targeting a move to the weekly FVG. If we look at the 4-hour chart, 3 is a gap within the daily FVG, which in our view is the best place to take longs with stops below the zone. First, price has to clear the liquidity zone before price can move to the weekly FVG. Previously we had thought that this zone would be the best place to initiate hedges. But we think that price is very likely to go into the weekly FVG zone, and this area would be the best place to initiate the hedges. If price gets rejected at the liquidity zone without testing the weekly FVG, then we take shorts at the first retracement with stops above the liquidity zone. If we look at the Dowjones chart, we can clearly see that the price is likely to make a new all-time high. We think that this will be the case. So any retracement is likely to be a buy targeting new all-time highs. This is just our views and expectations, and we will change our views depending on the market action. The same is the case with the S&P 500 chart. Here any retracement is buy to target initially the liquidity zone and then possibly all-time highs. So last week we were bearish based on the index divergence that we outlined. But the price action has made us change our views. At the end of the day, we are followers of the market. Those who refuse to follow the market will be crushed. But we are on the lookout for the index divergence in the next 2 weeks. We still think that Nasdaq is overall weak, and if Nasdaq is not able to overcome the weekly FVG, then we will have a situation where both the Dow and the S&P 500 make new all-time highs, but the Nasdaq does not. We keep our minds open to all possibilities. The 10-year yields fell as the oil prices fell. They currently sit at 3.65%. If you have been following us for some time, we have been expecting a fall to 3.25%. Oil and the 10-year yields are very closely correlated, and so we need oil prices to fall to below $60 for the 10-year yield to fall to 3.25%. Gold has an inverse relationship to the 10-year yield. So as the 10-year yields fell, gold broke out and has made new all-time highs. The 2 standard deviation move from the last stop run will take us to a projection of around $2,720. This should cap the move in gold for this year. We will become cautious on gold once it reaches $2,650. The price should get supported in the zone shaded. Crude oil. Price has fallen to a low of around $65 and has since rebounded to $69. The next big opportunity lies at around $71. This will be the area where shorts can be found. But remember, crude is very sensitive to geopolitical moves. Any supply disruptions could quickly spike the prices. So we do this analysis for study purposes only. However, in the long term we are bullish on crude oil. If we look at the weekly chart, the price is likely to head to around $62. This is because many big institutions will have stops below this level. So price can quickly go below $62 and maybe to below $60. At this point we will be very happy to go long crude oil producers like ExxonMobil. Finally, a quick look at the dollar index. As you can see, the price is on a downtrend on the weekly chart. So a bearish bias should be had. Any move to the shaded area would find sellers. We can take shorts there with stops based on short-term structure target 10 new lows. But if we look at the monthly chart, we have the monthly FVG supporting prices. Here if we close in the monthly FVG, then it will be very bearish for DXY. If however DXY rallies and closes above the monthly FVG, then it would be bullish for DXY. That's the market analysis for you from Muffett Investments. Now let's look at our portfolio. We only started the portfolio about a month ago. But we started the portfolio at the right time, when the market made a dip. We have therefore done very well and most positions are in positive territory. The total value of the positions is about £2,500. We are up to £32,000 as we close some positions in profits, and we're using Nasdaq and Dow futures. The idea here is not for portfolio gains but more to hedge the portfolio. We are looking to hedge the portfolio again if Nasdaq comes to the weekly FVG. Also notice that we are only using a small amount of the total margin available. This is a spread bet account and so it involves leverage. But we are very careful not to over-leverage. We have plenty of free cash to add to positions or initiate new positions. We are not convinced that the market pullback is done yet. We will watch and wait on the price action in Nasdaq at the weekly FVG. October could see a further pullback. That's why we have not added any new positions even though there are some good setups. We have let them pass by. But safety is the best defense. The portfolio aims are only 10% per year. But we are already above that. So we are not in a rush. Each week we look at some interesting stocks. This time we are interested in 2 stocks. These stocks are in our watch lists. The stocks are Shopify and Salesforce. Here is a chart comparing S&P 500, Shopify and Salesforce. Both stocks are currently underperforming the broader index. It looks like Shopify is underperforming Salesforce. But let's look at the ratio chart. First, the Salesforce divided by the S&P 500. Here the price has started to move up after a big drop. We need a big move up from to take out the last high and then we think it is a buy. The case is different for Shopify. The ratio chart here shows the downtrend line is broken. And we think Shopify is a better buy than Salesforce at this present point. However, the relative strength might change in October. We will decide in October. If you look at the Salesforce chart, the price has been in a consolidation. The ideal place to enter is for price to do a stop run and immediately reject higher. If we see that pattern, then we will go long on the stock with stop below the lows of the stop run. If you are following us, then you would know that we are bullish on biotech and real estate. So we want to highlight one stock from each sector. Viva Systems is in the biotech sector. The price has been in consolidation but showing some relative strength. Ideally, we want price to go above the last high with momentum. But we will be interested if it is showing relative strength during October lows. The second one is Sun Communities. It is a REIT. It has started to break out and will outperform the market in our view. We hope we have provided value. If so, please like and share and help the channel. Comment on your thoughts on how to improve the channel. Thank you.